The conclusion of the 20th century was an era marked by national feelings of tremendous optimism in light of the rise of e-commerce. This period brought about the birth of a new society that revolved around a new and revolutionary communication medium, the Internet. The dot-com boom represented a turning point in the American economic world, proving that there was indeed value in companies whose entire presence was strictly online. However, the rise in venture capitalism that took place during this time led to thousands of failed startups, along with millions in investments gone. There was a notion during that time that a company could be evaluated based on its perceived value as compared to the business's tangible worth. Droves of venture capitalists were eager to throw their money, however carelessly, into this new economy in hopes of making their mark in the future and turning a quick profit. During this period, the demand for computer engineers rose dramatically, and eventually, as a result of this overhiring, there was a surplus of computer engineers. After the bubble burst, many of these programmers who had rushed to earn computer engineering degrees found themselves without work. Many even returned to school to pursue additional education. Online companies quickly became desirable to investors, and the cautious approach they had followed for decades was quickly being abandoned in favor of fad-based investing. During the late 1990s, there was a certain semblance of hope and optimism that simply had not been felt in the nation in years. These risks, however, despite their positive intentions, led into a global economic recession, as a great number of these startups failed. Countless internet ventures were plagued by lack of profit, having an unsustainable business model, and ultimately being built upon unsuccessful concepts. Many of the companies received backers simply because of their online affiliation. Despite the number of businesses liquidated throughout the decade, some of today's most successful companies were started during this time, including Google, eBay, and Amazon. In fact, today's multi-billion-dollar corporation Google was almost sold to Excite, a former search engine giant, for approximately $750,000. Excite chose to bow out of the deal and ended up bankrupt in 2001. Today, Google is worth $498 billion. The excitement of the time led to many investors making impulsive decisions based on their desire to get rich quick. In many ways, this epoch was similar to the gold rush, in which countless individuals hoped to accumulate great wealth by way of risky business ventures, when in reality only a select few actually earned the capital which they had anticipated. The dot-com boom and bust served to teach us valuable lessons on the nature of business, economics, and ultimately the risks of fad-based investing. Unquestionably, the dawn of the internet and the personal computer were both groundbreaking and revolutionary. Yet we have now learned to make logical investing choices regardless of whatever buzz may be surrounding new technologies. However, this is not to say that calculated risk is not an integral part of building a successful brand or business, as evidenced by the massive global companies mentioned earlier. It's certainly difficult to imagine today's economic landscape without the internet, and I would argue many of the mistakes made in these formative years laid the framework for future organizations to excel. These companies were fortunate to have gained valuable knowledge from the errors experienced by others early on. Despite the thousands of employees left jobless during this time and the huge dollar loss, I would still argue that this great span of technological progression ultimately served to move both the country and the world forward.